Assalamu alaikum everybody, welcome back to the channel. This is Invest Academy. Today's video I'm going to share with you how I pick halal stocks and then show you 2 dividend paying stocks that I have invested personally in the last 9 months. I have started investing in the stock market in the last 9 months. I've learned so much over the last 2 years, 3 years, but like I said in my last video, I have been a little bit skeptical about investing in the stock market. So today basically I just want to share with you how I have been, how I got started, what I did first, and then show you those 2 dividend paying halal stocks that I've invested in so far. So the first thing we're going to look at is basically how the brokerage basically I've used when I started investing in the stock market. This is for UK only, for UK citizens only or UK residents only, and basically I've opened stocks and shares ISA with Hargreaves and Lansdowne. That was what was recommended by some of my friends. They are one of the biggest brokerage companies in the UK. I started with them first, and then I've very quickly realized that they were charging me a lot of money. So every transaction, every time basically I buy 1 share or 1,000 shares of a company, it made no difference. I had to pay about over £11. And to start with, I thought this is great. They seem to be really great company. They have so much basically assets in management, so why not? But very quickly I've realized every time I buy I bought a new stock, I was paying £11, and that was very, very expensive. So alhamdulillah, then I moved on, and then I came across this company called Trading 212. Trading 212 is zero commission investing app. They have website and they have an app, and they are absolutely great. I've been using them for the last, basically putting all my money in this company, with this company, in the last 9 months. Now they have what's called fractional shares. So for example, if you like to buy a Tesla, for example, and you think it's too expensive, you can basically buy a fractional share. So if you've got like £10, you can just put in £10. You don't really have to have basically £2,000-3,000 to invest in one go for one stock like Amazon and so on. So really good app. One thing I love about them is just how easy the website is, and since I've been with them, they've actually updated regularly, and now they have what's called basically auto invest and pies and things like that, which is really great, especially for someone who's starting investing for the first time basically. They are obviously regulated by the Financial Conduct Authority, and your money, if you invested, say for example, up to £85,000, that is safe. That basically, if the company goes down, then that means you can get back your £85,000 that you invested with that company. Anything more than that obviously is a bit tricky, but you might not get back that money basically. Okay, so again, it's free to use. It's excellent app. The website is great. They've been doing a lot of updates. Basically, it's not just by the way, just for the UK. It's over for Europe. So they use it in Germany, in other countries as well. So really great app, and that is basically what I'm currently using. I'm also using Trading 212, Free Trade. I've only started using that very recent. And I'm still evaluating, so I still really don't want to share that information with you yet. So once I've actually get my head around how good they are and so on, then maybe I can share that with you. So that's basically how I got started using these apps, and how basically this is first time I basically started investing. My money straight away was going into Hargreaves Lansdowne. I had about almost £2,000. Then I realized it was too expensive, and then I moved on to Trading 212, took all my money out, closed the account, and right now I'm only using Trading 212. And like I said, I'm basically evaluating still free trade as well. Okay, and these companies basically is easy to open. If you would like a share, basically a free share, whenever you open basically an account with Trading 212, you will get a free share, and I will get a free share if you use the link below. I'm going to leave the link below there for you. So inshallah, if you would like to use that, go for it. Okay, so once I've got the account set up, then I had to do a bit of research to find out companies that I can invest in. Then while I was doing my research, I came across a company called Wahid. And Wahid is basically, I think they're based in the United States, but I think they kind of coming over to the UK, or maybe they already are, I'm not sure really. So I went on their website, I found out they have what's called ETF. ETF is basically exchange traded fund, and is where you have almost like, say for example, 200 companies. So you put 200 companies together in one pot, and then we invest in that pot. So it's really good in terms of like risk wise and things like that, because if one stock goes down, you still got another 199 companies in there that are still doing well for you. So it's a very basically good way of investing. But at the moment there's not that many in the UK. I have a video coming up in the maybe next one or one after, going over the ETFs that are available, how much basically the expense ratios and all of that stuff. So inshallah I will share that with you, that information with you soon. So when I actually came up with this ETF, it had a loads of different companies including this. So this is what the ETF looks like. There's 200 holdings in that company. It's called Halal, and this is only available in the United States. So I looked at these companies like Apple and Johnson & Johnson, Procter Gamble and Tesla's, Adobe. So I thought this is really good. This means they've done the background research, because one of the people that were actually promoting this company is Sheikh Yasir Qadi, and someone who I really respect and like. So I thought if he's promoting this company, then they must have a credentials, they must be really good. So alhamdulillah, I found this company, they have those ETFs. I can't invest with them because they are based in the United States, especially for this ETF. So I thought, you know what, let me start investing with some of these companies. And Apple was the first one, then I did it Johnson & Johnson, Procter Gamble and so on. At the moment I own basically almost the first three, and then Merck, Pfizer and so on. So alhamdulillah, I've been investing basically based on using this sort of ETFs. There's a few others, and inshallah I will share that with you in the next few weeks and months. So this is how I started, because initially I wasn't sure how to do the research myself, so I had to basically rely on other people's research, and especially because Wahid had as the one of the promoters basically Sheikh Yasir Qadi, I thought, you know what, this is great, why not go for it? So that's what I did first. Then I obviously did a little bit more research and found out the hardest thing to spot on is basically to spot when it comes to investing, and especially in companies that you have no idea of, and reading their balance sheets, and I wasn't sure what I was looking for. So while I was doing a bit of research, I found out when it comes to debt, you need to look at companies that have debt between 30 to 33%. Now I'm not sure how that number came about, but I'm happy with companies that are doing maybe less than 30%, because remember, the more debt a company has, the more they will have to pay back. So if a company goes down tonight, the first thing they're going to do is pay their debt. Okay, so that means you're going to lose a lot of money. So it's always a good idea, even Muslims and non-Muslims, this is something that you look into when you're actually investing in a company. So yeah, again, it's 30 to 33%. Inshallah, maybe I'll go in more depth. If you want to know basically more information about how to do this, all you need to do is find the company's debt divided by the market cap. Okay, and that will give you a percentage, and whatever percentage you get, then obviously if it's less than 30%, then I'm happy with it. If it's more than 30% or 33%, then just go away. You basically don't use that company, just find another company. Alright, so now we're going to look at, inshallah, I'll do more analysis of the next few weeks and months to come, inshallah, about how to find the companies that are doing halal investment and so on. So the two companies that I would like to go over today is Apple, so that's the first one, and Procter Gamble. After that. So Apple is obviously, I'm sure you know about Apple. Yeah, when it comes to their revenue, majority of it comes from the iPhones. I'm sure you've got one of those. So Apple is currently trading $126 per share. For this year, they are up about 81%. So this has been a successful year for a lot of the tech companies, especially so-called stay-home companies, and that's why their shares are actually quite high. Basically their market cap is over 2 trillion companies. Apple just became this year, the richest company, if you like, in the world, and they are at the moment their market cap is over $2 trillion, which is great to see. They do pay some dividend. Okay, I do invest, a lot of my investment is companies that pay dividend, and they do actually pay a little bit of dividends. It's not a lot, 0.65. Again, that's better for me because this is a growth company, so I really don't mind that at all. Okay, and then they have a PE ratio of 31, slightly high. Normally you look for 20 or lower than 20%. Okay, you don't want to be anything more than 20 a point. So at the moment, so from the heights, so $133 was the highest. Basically Apple went up this year, possibly it might go back to that. So if you were to buy a share in the next couple of days, it might go up, it might go down, it might hit that target again. We don't know, only Allah knows, but you have to obviously do your due diligence and just make sure that you're actually happy with investing your money into Apple. Okay, so like I said, the dividend is 0.65. It's not that basically much, but I'm comfortable because I know they will be increasing it. The last 5 years they've actually increased that dividend by basically 10%, which is quite good. And their payout ratio, which is basically based on their earnings, okay, basically they're spending about 20% of their earnings paying back some dividend to the stockholders, okay, which is excellent as if you to see, because you're looking for, there are some companies that are literally spending over 100% of their income paying dividend to their investors, which is not great. Okay, so the other 80% could go back to the company and invest in something, some new product, a new Apple phone or whatever. Okay, so it's great to see that, and over the last 5 years they've been growing their dividend. So if you can look at it here, for the last 5 years Apple have been growing their dividend, which is excellent. So that's what the kind of things that you want to see. So in terms of growth, again, the 10 years growth is not there at the moment, but the last 5 years, because they haven't been doing this, it's only been doing it for 9 years. So you've got 5. For the 5 years is almost over 10%, and 3 years over 10%, and 1 year is about 6%, which is not bad. You're looking for, I normally look for about 7 to 10%, if not more, but obviously every company is different. So the next thing is the revenue estimates for this year and the next couple of years. So if you look at their sales this year, 2020 December, with basically the analysts are saying about 15%. That's basically how much it's going to grow, and the next quarter, okay, is about 24% or more, and then current year, okay, so the current basically year will be about 14%, and the next year they're saying it's going to be about 5%. Now you have to take into consideration this part here, March, because Apple just released a new iPhones. They haven't actually, they're still selling those products. So by the time we get to March, we will know how much they've made. So this could be huge. We don't really know that, but we'll see, inshallah, how it goes. Okay. Again, this is basically just to kind of give you overview of Apple's current financials. Okay. And again, this is basically similar to what I've shown you earlier. So current quarter is about 11% growth estimate. So again, you want to see a company that's growing rapidly, or some companies are very, for example, if you were to buy Coca-Cola shares, you probably see growth of like 2% every single year, which is not great. But if you're looking for companies that are, that's going to be around for the next 10 years, 15 years, and pay you some dividend and give you some sort of a growth, then Apple is the kind of company that you should be investing in. Okay, so the next thing we're going to look at the current price. So currently it's trading at $126 per share. The analyst actually saying is 126. So basically it can hit that target at the moment, but I wouldn't be surprised if it goes down again or goes up. Again, this fluctuates depending on what's going on in the market. But the good news is a lot of the analysts are saying right now Apple is a buy. Okay, with this sort of a price, they're saying is a buy, and that's excellent to see. So it hopefully will be a strong buy in the next few weeks and months to come, because when the earnings come out and we realize their earnings per share is higher than what we expected, then obviously it will be a strong buy. So if you buy it right now and the earnings has actually gone up, then you could potentially get up to $160 per share. That's basically almost 30 whatever pounds, dollars more than what it is currently. So that's really good. That's really good. Okay, so the next company that we're going to look at is Procter Gamble. Again, I'm not sure if you know about this, but this is one of the biggest companies in the S&P 500. Now, this company is currently trading $139 per share. Is up 12% this year. Market cap of $344 billion, and the PE ratio is about 24. Hopefully will come down in the next few months, because I like to have companies whose PE ratios are like less than 20%. And the dividend is really good, so it's over 2%. That's really good, and this is what is called basically a value company. The company sells all sorts of products. I'm sure you've seen some of these products, from Head and Shoulders and Always and Tide, whatever, Pampers. I'm sure if you look at it right now, basically in your own house, you will see some of these products. They sell. Okay. And then obviously some of these companies you don't want just to be based on either UK or US. You want be global companies that are actually making a lot of basically the revenues comes from just outside the United States, outside the UK and so on. This is one of those companies. As you can see, almost 50% comes from North America, but the rest it comes from for example, Europe, Asia, for example, China, Latin America, India, Middle East and so on, and Africa. So again, that's excellent to see. So that shows you is a great company to invest in, and the product they sell is product that is in demand, that everyone needs. Especially what's going on at the moment around the world. It's like this is the product that we currently need, because a lot of people are locked away in their homes and so on. So at the moment, over 2%, which is really good. You get about per share, basically this is what you get annually. Okay, and again, if you are a UK investor, this basically you have to deduct about 15%, because you have to pay some fees towards this. So you have to pay about 15% of this. Okay, now they are spending at the moment, their payout ratio is just over 50%, which is absolutely fine. So that's not bad at all. The growth is not a lot. Hopefully it will be better, but the good news is they've been growing their dividend over the last 64 years. That's absolutely brilliant. Not a lot of companies actually can say that. Okay, so even though the growth is not a lot, but 64 years dividend growth, that's absolutely brilliant, and that's the kind of thing that you want to see. And if you look at this chart, you can see since 1990 they've been growing their dividend, and that's absolutely brilliant to see. Okay, and this company obviously have a lot of cash, and they're not going to run out basically cash in the next few years, hopefully. So they will be paying their dividend regardless, and this is just kind of give you an overview of what I've shown you already. All right, so finally the sales growth this year, so basically current quarter is about 4%, 1%, and then 4%, and then 3% the next, basically in 2022. Now this is just estimation, but again, this is expected from this type of company. This is a well-established company. They're not like a technology company. Their products are well known. They're not that innovative, if you like. So that's kind of expected. Okay. And if you look at the currently, current quarter about 5%, next quarter just about less than 1%, and then current year about 8%, and that's what you want to see. So the current year, the growth estimate is about basically 9%, which is really good. Okay, and hopefully in the next few years we will see how that goes. So the current price is 139 at the moment. It hasn't actually the average. The analysts are saying the average, the basically price will be about 151 per share, which is quite good from where we are at the moment. And is at the moment is hold, buy, count. So majority of the people are saying it's a buy. So hopefully we'll see the next when the next earnings come out, if it's basically beating their revenue top and bottom, hopefully then we can see maybe that going up a little bit, and the price obviously will appreciate as well. Okay, so that is the last company, and I hope you've enjoyed this video. I'm gonna make a few more of these type of videos inshallah next few weeks and months. By the way, these are companies that I've invested in myself. I've done my analysis. This was kind of very quick analysis, but I've done a little bit more in-depth analysis, and inshallah I will show you more videos. I'll share some videos with you of how I actually do this type of things. Like I said in my last video, I've read quite a lot of books about this sort of analysis. I've gone through it myself, and I've used that to actually put my own cash. I'm not a rich person, anything like that. I'm just trying to I'm very conservative when it comes to investing. I'm not like a risk taker. So inshallah my plan is dividend, hopefully solid income that I can use in the next 5 to just grow in the next 5 to 10 years, and inshallah use it when I'm closer to retirement. So yeah, inshallah that's the plan. This is Invest Academy. I hope you've enjoyed the video. Please share it with your friends and families. The reason I started this channel was to help other people just like myself, because initially when I started there was not a lot of there's literally nobody out there that does this type of videos, and I really struggled at the beginning, but alhamdulillah I've learned so much and I want to share my experience. So if you like it, please share with your families, your friends and so on, and encourage other people to start investing, because this is the way forward. And inshallah if you want to spend time with your family and loved ones and go to the masjid and pray your prayers and have a little worry about financial situations, the way forward is investing your money in either in the stock market, properties, other things that you can invest in, or starting your own business. You've got to have some sort of a passive income, and inshallah I will be doing a couple of more videos on that side of things. But thank you very much for watching the video. Have a wonderful day. Assalamu alaikum.